Okay, it is Sunday the 5th of September. Welcome to the Stage Analysis Members Weekend video. For any non-members watching this video today, as I'm posting this one for free on YouTube, this is the typical weekly video that I do for the Stage Analysis Members, which is a premium service that is run via a private Twitter feed, and we also have a private area on the Stage Analysis forum. So it uses a combination of Stan Weinstein's stage analysis method, which you can see on this chart here of PayPal. This is an intraday chart, and the Wyckoff method, which you can also see. So this is an example of some typical kind of markup that I'll do on a chart where we'll show the various stages. I might not put the entire stages on each time. I might only show a stage 2 breakout, for example, here. And obviously when we're in bases, we'll look at some Wyckoff markup. So you've got a selling climax down here and an automatic rally and secondary test. Then you had a secondary test in phase B as a spring down here. Then a last point of support. And then we had a stage 2A breakout here on volume expansion on the breakout. And then that's in the Wyckoff method, that's considered a sign of strength rally. But we had a initial buying climax as it ran into resistance from the lows of this stage 3 range up here, so you can see, which was also the peak liquidity level, and it started to form a little micro Wyckoff range of its own. So again, you've got a buying climax, an automatic reaction, a secondary test, and then more testing, and then you've got a potential little local LPS in here. So we're looking for a continuation breakout above this, and you can see we've got about a 4% sort of risk on this one at the moment before it would be considered a failure. And you can see the volume dry up in this base area here following the stage 2A breakout. So we're in the mix of the Wyckoff and the Weinstein method. So it's buyable. It's in a buyable area in both methods, but Weinstein focuses more on the breakouts, whereas Wyckoff is more on the dry ups in volume and reversals. So on strong bars like that, reversing off of the lows of bases. But basically, we use a multiple time frame approach. So we'll look at charts on the weekly, daily, and the intraday time frames as well. Often the 2-hour time frame on each day for swing trades. This is not an alert service low. I basically post ideas and educational kind of content. If we go intraday, so intraday on the Twitter feed, so I'll post, so from September the 3rd here, so MDB had a power earnings gap with a massive 6-month cup and base handle here. So you can see I'll post that intraday, and I might follow up on those in the following days. So and go into a bit more depth. So this would be looking for example, a fishhook type entry point where you'd buy through in the following days as it moved through the close of this bar, whatever that was on Friday. And sometimes you might use other techniques to get in as well. So the Bible gap up entry point, I think, is on the open on that day, so was a little bit late on that one, so would be more interested in using a fishhook type setup. Or another way is to use the anchored VWAP. So you use the anchored VWAP attached to this, and then in the following days, once it starts busting back through that anchored VWAP, then that would be a further entry point on that. So this is the private Twitter feed. It's fairly new again, as I did move off to another service for a little while. So it's called Stage Analysis Members, which is at @stage_analysis. And basically intraday, I post about various stocks and crypto. And again, so I can see that this is some typical kind of markup. So this is a Ripple from the crypto with some Wyckoff markup on it. You got a declining channel here. We've had a sign of strength rally, and it's potentially in the backup. So we're looking for a continuation move on that one. So, and similar in the other cryptos. And at the weekend, I'll post I do relative strength of all of the various industry groups, which you might have seen on my free Twitter feed. So you can see here at the moment, coal is the strongest group. And then the weakest group at the moment is brewers, and you've got like renewable energy, which is the solar names, which has been one of the weakest groups of the entire year, which is continuing down the bottom. And then I post 1 week change, 2 week change, 4 weeks, etc. So there's that, and market breadth charts, and I'll look into the groups in a bit more detail. I also do some crypto breadth, so percentage of cryptocurrencies above their 20-day, 50-day, 150-day, and 200-day MAs. So this is cryptocurrencies percentage of coins above their 50-day MA chart. So the buy signal on this one is when it moves back through the key 30% level, which is this green line here, and it's been in the lower zone for a while. So you can see we had that trigger down here, which was around July time there. So I was highlighting that a lot to the members at the time. Then last year, back in, it was also late July time last year when we had the major stage trade breakout on Bitcoin, and you can see all of the various other coins moved with it. And then see, once it's back above this 10-week moving average here and rising higher, then you're in a bull phase. So as you can see, we've had a strong bull thrust, and we're back up really high. And in the top, we've got 82.24% of cryptocurrencies above their 20-day, 50-day, 150 and 200-day MAs combined at the moment. So we're in a strong stage 2 at the moment in terms of the breadth for crypto coins. Whether the actual coins themselves are in stage 2 is debatable. In some cases, a lot are still in stage 1, as most were very deeply oversold after the move back down in May. So I also do cumulative point and figure breakouts and breakdowns, another breadth chart that I do with the various incarnations of that. And one of the key ones that I do is for market timing, which is the percentages of stocks above their 50-day, 150-day and 200-day moving averages combined chart. So this gives us whether we're in a positive or negative environment. And when we're above this 50-day moving average of the chart itself, we're in a positive environment, which you can see in the last couple of weeks we've moved into a positive environment again after having a little spring type action down here in the lower zone where it dipped below the 40% level for a little while. Obviously, again, the biggest signals in these come when it's been in the lower zone for a while. So we only pull back to the middle zone. So it's not the strongest signal at the moment. It's a sort of middling signal as we're moving, as we've got a middle field position here. We haven't flushed out in the market. So still a chance we could roll back over again. But for the moment, we've moved back to a positive environment. You can see since February, the market has been, except for that brief period in May/June where it popped back above again, we've been in a negative environment that entire time. And that has been obviously the case for most of the growth stocks and small caps, etc. It's only been the large caps that have been moving. So as you can see, this is kind of an example of the kind of content I post in the private Twitter feed. Sorry if I'm going a little bit fast. I post the daily watchlist stocks in there as well, which I do a sample of for free for people, and some other more detailed posts. So another way of doing this is that we've also got the stage analysis forum. So this is we have a free section. We also have a members section. So the member section is something I've only added on this weekend, but this is a chance for me to do more detailed posting here, so I can break up what I post in the Twitter feed into much more sort of detailed areas. And so, for example, the position trading and investing in US stocks here, I did a detailed post on Crowd a few days ago, and I reposted it again. But you can see this was highlighting the stage 2 breakout to new highs on the weekly chart, and the daily there. This was before the earnings and the Wyckoff point and figure targets and its various earnings metrics, etc. So I like to, with the position trades, go into much more detail on those ones. And we've got crypto, which we've been posting a lot over the weekend. So I already showed you the Ripple. We've got Bitcoin is tightening up again on this 4-hour chart. You can see on the daily marked up the range here. So moving through those at the moment, and then also got the stock market and industry groups. And like I said, I break out these. You've got the percentage of stocks above their moving averages. You've got the cumulative point and figure. I post all the index charts, the relative strength tables, and individual stocks to do with the individual groups. And then we've got some other areas as well. So this is a developing new area. But for the moment, the private Twitter stream is the main thing. So basically, if you're interested, then obviously come and join. So it's a low cost subscription with a monthly recurring fee. So you're free to cancel at any time, no troubles. And basically subscribe using the link below on the video on YouTube, or alternatively just go to stageanalysis.net and click on the middle link in the top here, join now, or the membership button here, and then that'll take you off to the review page that I use as the subscription area, and then you can sign up down there with a credit card. So that's that. Let's now get into the normal weekly content for the members that I do each weekend. So I normally begin with the index charts. I do like a stock market overview of the major index charts, and then I'll look at the industry groups and sector RS before doing some market breadth. So as I showed on the previous bit, I like to focus on the market breadth a lot, as in Stan Weinstein's method we look for what's called the weight of evidence. So we're looking for not just a single breadth indicator to tell you what's going on, but the combined signal from all of the different breadth measures altogether. So my key one is the percentage of stocks above the various moving averages, the bullish percent index, the advanced decline lines in their various guises, the new high, new lows, and the cumulative point and figure breakouts minus breakdowns, which is a custom one that I created. So, and then I'm also on this video going to go into something new that I've created, which is called the stage analysis technical attributes, which is the SATA score. So it's based on relative strength of individual stocks. So I'll quickly show you this. So this is the SATA chart. So basically if I highlight on here. So what is SATA quickly? So it's a stock that's in stage 2. It's on an RS buy signal versus the S&P 500. The stock is on an RS buy signal versus its peer group, which is the industry group. Its peer group, the industry group, is on an RS buy signal versus the S&P 500 itself, and the sector is on an RS buy signal versus the S&P 500. So if all 5 of those are true, it would get a score of 5. So for example, this is DOCU. So I've marked up this. So these bottom areas here. So you've got the stock versus the S&P 500. You've got the stock versus the industry group. You've got the industry group versus the S&P 500, and you've got the sector versus the S&P 500. So this blue line here is the 52-week moving average of the relative strength line itself. So which we call the zero line in Stan Weinstein's method. So that's your zero line. So if you're above that, it's positive, and when you're below that, it's negative. So outperforming above and underperforming below, and ideally with the moving average itself rising. But so you can quickly, when looking at a chart, you can see this chart moved into stage 2 recently around here, where the SATA score moved to 5. So you can see when it moved to 5, when each one of these, obviously we're back above their lines here, so you can quickly do a score count. But you can see the week before that, it only had a SATA score of 2, as it wasn't yet above the line. So you can see this grey line here, it was still underperforming in the industry group versus the market, and the sector versus the market was still slightly below. So it only had a score of 2 here, because it was still in stage 1, and it only had 2 of these above the zero line here. But the following week, it went on to a SATA score of 5. And so we're on the strongest technical score for this at the moment. And so that's now back to a 5. So it's quick to do. You can just quickly look at a chart. Is the stock in stage 2? Yes. So 1. Is it above the zero line here? Yes. 1. Above the zero line? Yes. Yes. And yes. So currently got a score of 5. And as I said, so we go back down here. You can see this point here. We had this big thrust after a Wyckoff spring, back through the 30-week moving average, and the SATA score was a 4. As you can see, this down here, this was a yes, this was a yes, and this one, but it was still at this point. So all of the relative strengths had moved back above their zero line, but it was not yet in stage 2. So it was still only in stage 1 or recovering in stage 3. So until it made the stage 2 breakout, it was still on a SATA score 4. So, but you can see from SATA score 5 here back in 2019 there, it had, until it started breaking down again back to SATA score 4 there, you had a 285% move there, and that covered the vast majority of its stage 2 advance. And that, obviously over here, it started to move into stage 3. So when it started to move down the relative strength rankings again, it started to move. That's where you can see it started to move off into stage 3. So this initial change of behavior here would be your first warning that it might be moving into stage 3, but you can see we were still grinding up, so it would have still been considered late stage 2 at this point until we got the change of behavior back here. So it would, and then would be definitely considered stage 3. So that's the SATA. So actually I probably won't talk about this later in the video now, as I've just gone through all of that. Right, let's go back to, and then at the end of the video, I'll have a look at the watch list stocks for the week. So we've got some of the various stocks that I'm looking at the moment from the weekend scans. Right, let's go back to here. Okay, so I always start with the Nasdaq Composite. So this is the major index for the type of stocks that I like to trade, and sort of the stage analysis members trade in a lot. So it's majority Nasdaq stocks. We do obviously cover NYSE stocks as well, but most people tend to focus more on the discretionary and technology and communication services names over utilities and staples and industrials and materials, etc. We do, like I said, I do cover those, but it's much more CanSlim style growth names, which tend to focus more on the Nasdaq. So anyway, as you can see, we're developing a stage 3 range over here back in the March time. And this was obviously a very difficult period in the market for growth type stocks. And then we had a further stage 2 continuation breakout. We've been grinding higher, and we continue to make new highs. And we made a new closing high yet again on Friday. You can see we've had this overthrow of this near term channel in here. So we're starting to extend away from the 50-day moving average again in here. If let me change this chart up a little bit and add the 21-day EMA there, so you can see the 21-day EMA is a little bit extended from at the moment. So tightening up the last few days, it's a little bit extended short term. So potential to watch it pull back a little bit, come back to its 21-day EMA, the top of this rising range, and start to create a little bit of VCP again and start to move out before potential continuation. We'll see if it continues up immediately. That will be lovely. Obviously, I'm fairly fully invested at the moment, but I would not rule out a pullback in here. If we look at the Nasdaq 100, you can see, actually, if we go back here onto the highlight, the relative strength line on here, so you can see the Nasdaq, even though it broke out into stage 2, the Nasdaq Composite, it's still been underperforming the S&P 500 through July and August, and we've just started to outperform again with this last week's price action. So through July and August, it was underperforming, whereas the large caps, the Nasdaq 100, start from June was outperforming the S&P 500. You can see it's above the zero line here. So the large caps / mega caps have been the place to be over the last few months, but in the near term, the small caps and the CanSlim growth names are starting to come back again. So if we move on and go to the 50 FFTY, which is the IBD 50 index, this one's a little bit more choppy than what I used. I used the QQQJ a lot more than this one, but this is a good proxy for what's going on in the CanSlim growth stocks. You can see I've marked up with the Wyckoff markup on here. It's been in a stage 3 range for a while. We made a stage 2 continuation breakout here. We've got some strong relative volume coming in. We've had a sign of strength rally off of this last point of support down here, and you can see that we could potentially be an up thrust on here. It could start to roll back, but we want to see where this leads first, and then watch for how it reacts on any kind of backing up action. So if we look at the QQQJ, so this is a bigger index. So this is the Nasdaq second 100 stocks. So I use this one quite a lot, and as you can see, since the May local spring in here, we had a local spring and test. So the spring there and then test and follow through. So you got like a little secondary entry point in there. We had a sign of strength rally. It didn't get all the way back at the fair, so it's only a minor sign of strength rally, and then we started to pull back in again. Made a last point of support in here, which was tallying around some previous lows. So there was multiple support areas in here, and it made a higher low. And then we made another higher low on the following pullback. And then we've had this sign of strength rally. And you can see there's not been much in the way of volume coming through, but you can see the ease of movement as it moved back through that 50-day moving average. There was the gaps. We had 3 days of gaps there as it moved from the spring low. So there was, and it didn't even pull back on that day then. There was only a tiny little wick here. So it's been moving up higher with what we call the ease of movement here without much need for volume. So the expectation would be for it to continue to carry on in stage 2, but but obviously it could easily start to consolidate and pull back. It's had a really strong move for a couple of weeks, so it could easily spend a bit of time consolidating and going sideways for a bit and backing up into the support areas, and how it reacts on that backup is crucial. So, and what else do we want to look at? So I've looked at the 50. Another one, this was a really strong mover last year, so very similar to the ARC. So if we look at the weekly chart on this, you can see last year from the March low, this rallied strongly, and this is the IPO names, and you can see this has finally started to come back, and we had a little stage 2 breakout this week. No volume particularly, so nothing dramatic at the moment, so it's a little bit tenuous. But you can see it's been basing for the last, well, since February time and into March, and then it's been going sideways and basing. You can see we've had this little breakout. So if we go back to the daily chart on this, it's got some, I've marked it up with the Wyckoff markup. So this is a selling climax and an automatic rally and a secondary test. So that's your phase A area. Then we had a phase B testing phase where we had a little shakeout and test in phase B as it made a sign of weakness in here. But then it came back up through the 200-day moving average, and we had this little minor sign of strength rally, which had a minor up thrust, and it pulled back in. You see we made a higher low, we got some volume came in, and it started making a multiple higher lows in here, and then we started to follow through the last few weeks, and you can see that. And imagine you've noted the various IPO names have been breaking out again, and the last few days the SPACs have started to take off again. So there's a lot of SPACs that have been really deeply oversold. So if I quickly go back into here, so in the watch list a few have popped up. So for example, VIH, you can see this is your typical SPAC action since the sort of February top and breakdown. They all pull back to their $10 level, where they generally can't go much below because they're kind of pinned to that level. And you see the last few days there's been multiple SPACs that have had this kind of action. So if we're going to a 2-hour chart on this, where some heavy volume has come in and they've started thrusting up again. So it's definitely something going on here with the smaller cap names and the IPO names starting to break out again, and it's definitely what we call a change of behavior. As in we had the change of behavior back here in February as it went into the negative, and then we had the stop in action and we went into a range. You can see we've got a change of behavior going on again. You can see the pullbacks have been less sharp, they've been much smaller, bit of like VCP type action, but in a sort of raggedy way. But you can see the pullbacks in the swings have been much smaller each time, and the action's been a lot smoother, and we're starting to have the ease of movement and generally focusing. We've had multiple weeks of just up days in a row with very little in the way of negativity. So again, with this, started to see some traction, and so would expect the sign of strength rally. You'd expect it to roll out a little bit, and then for some backing up action and to form a range on top of there. So similar to what we showed in here in PayPal earlier, and you get your breakout move, and then you get some backing up action and consolidation before making a continuation breakout higher. You don't always get that, but that's generally what we look for in stage analysis and Wyckoff type structures. So the small caps have been one of the weakest areas in the market for a while, but we did have this sign of strength bar last week at the end of the week. I think that was Friday. Was that potentially Friday last week? Yeah, Friday last week we had that sign of strength bar. It thrusted back for its 50-day moving average on strong volume, and then this week we had some nice easy movement where it pulled back a tiny bit, didn't even get halfway into that bar, and then continued on and got back towards the upper part of the range again. So there's not much in the way of volume, but there's also not much in the way of supply coming in here. So it looks healthy. And so watching for this one to move back into stage 2, as on the weekly, still in this big stage 3 range that it's been in for a while. So watching for a stage 2 continuation breakout on this one. This is the 2-hour chart. So one of the things I do is drop down the time frames and go into the multi-time frames. So whether it's looking on the weekly chart, so we've got our weekly chart, we're looking at it's in stage 3. Our daily chart, we're looking at, you can see the stage 3 range in there, but it's starting to get back above that 50-day moving average, and the 21-day EMA is crossed over and is turning back up again. So And then we'll go all the way down to the 2-hour time frame or the 1-hour time frame, then mark up the stages. So you had a stage 4 decline, we had a stage 1 base, so you can see the Wyckoff structure in there again. So then climax, automatic rally, secondary tests, and then we had this up thrust in action here, the sell off into some local spring type action, and then we've had you can see this movement here. There wasn't a single negative day for bar, not day, so it's 2-hour bars for a couple of days there, with only one negative bar, and then a minor pullback at the top of the range in the peak liquidity zone before this sign of strength bar on heavier volume. So we've got our stage 2 breakout there, and then it's grinding up in early stage 2 at the moment, so in the sort of backup range at the moment. So could potential for a continuation, or it could continue to back up a little bit more. But that's the multi-time frame approach that we use. We look at the weekly, the daily, and then the intraday, and we tally them all up together. Because as a breakout, a stage 2A breakout on the 2-hour chart, for example, on the daily chart is only showing up as a near-term breakout there. So you've only got this bar here, so it gives you potential for an early entry point. You're not like one of those people that's just randomly buying breakouts at new highs for no good reason, when there's a much better entry point in here, because you can see that stage 4 decline into stage 1 and then back out into stage 2 in here, just in this little range, which gives you an early entry point, and then you can add to your position on a new high breakout if the volume's there, or wait for some backing up action and then get in back there. So it gives you a much better potential to get in at easier points. So look at the IWO. So this is the Russell 2000 growth names. It's a similar type of action, but you can see compared to the Russell 2000, which is formed near the top of the range, this is formed in the lower part of the range and got much more down to its 200-day moving average. And we did have a dip below for a few days, but we had a strong demand came in. You can see that gap behavior there for a couple of days and back through the 200-day, and then we rebounded last Friday with that sign of strength bar again. We're back above this 2ATR level in here. So again, this one's looking interesting. And if we go on our 2-hour time frame again on this, you can see that similar sort of price action in here. You've got your stage 2 breakout. We're early into stage 2 here after this stage 1 base that it was forming. QQQJ already talked about. Right, next up. So this is the individual sectors and major indexes. So we have gold, treasury bonds here. As you can see, this is forming a stage 1 base. So we're going to gold quickly. You can see actually I've got a better chart of gold further over here. So you can see gold itself has been forming a stage 1 base for a couple of months now. So into what we got there, 14 weeks now. So 3-month stage 1 base. We had the change of behavior as it moved out of stage 4 here when it had this failed spring type action down here as it undercut, but it didn't make any progress. And then we had this change of behavior which got it back out of its channel, and then we've started to form this stage 1 base around the declining 30-week moving average, and the 10-week moving average has started crossing above and below. So stage 1 base on that one. You can see let's get back into here. No. See treasuries doing the same sort of thing. Stage 1 base forming in here. We've got back above the declining 30-week moving average, so it's forming a high stage 1 base. And you can see the relative strength is still underperforming. So these are two of our weakest relative strength groups in here. So you can see the SCTR score is stock charts technical rating or something like that. But basically 100 is good, 0 is bad. So you want to be the S&P 500 is the baseline, so you want to be in anything above that's outperforming the S&P 500, which at the moment is real estate this week, really strong. The Nasdaq, technology group, healthcare and communication services. So you can see financials was the top group last week, but it had a bad week. It was making a cup and handle type thing, but potential late stage failed base type action in that one. It might not be. Go into the daily quickly. You can see this cup and handle type thing, but you can see it rolled over here, so people were shorting on the potential breakout to new highs in there, so they're not feeling it at the moment. But basically at the moment, how the relative strength works is that we want to be outperforming the S&P 500. So you want to be in groups that are either already above it, or you want to be in groups that are rapidly rising up the table. So the Russell was the bottom group a while ago, so it started moving back up the table. Not quite there yet, still below the S&P 500. But if that starts moving up the table again a little bit stronger, then I'll start to take more notice of small caps again. But for the moment, it's technology, the Nasdaq 100, healthcare, communication services, and real estate this week. that are the areas that are outperforming. You can see on our individual weekly thumbnails here, you can see that most are still in stage 2. The S&P 500 itself, you got some stage 3 charts in here: energy, materials, industrials, discretionary is potentially attempting to break out into stage 2 again. But you can see the majority are still in late stage 2 there. All right, let's move on into the individual groups. Right. So this is the Dow Jones US industry groups. So stock charts keeps the 104 industry groups. So there's 104 individual groups, and within these, it has a really handy feature where you can obviously click into the groups. You can see them on a weekly basis, daily basis. So the internet group is one of the strong groups, and you can see that VNet, for example, had a really strong week, up 22%. It's in a strong group, so you can see it's coming out, starting to recover. But this one's it's an oversold name, only just getting back above its 10-day moving average, but it's below its declining 30-week MA there. So not one I'd be overly interested in at the moment. But the RS score goes from 0 to 100, so 100 is the best. So coal has been our best performing group for the last 12 weeks. You can see 0 means it hasn't moved in the last 12 weeks, and in this group, I think BTU has been our strongest performer. Which, if you can see here, this moved into stage 2 on the weekly back in May time. You see we had a stage 2 breakout back here as it moved through, and it's been up 200% since then, with not much in the way of give back. It's been choppy on the way up, but you can see it's held above this rising 10-week moving average the whole time. So you've got a strong 200% move in there, and similar, there's some other stocks in the group doing really well as well. So that's why that's the strongest performing group at the moment. But recently we've got some more growth names coming back in. So software, see at number 10 there, which is ninth, because number 1 is the heading row. So software's back into the top 10 again. It's held there for another week, so with an RS score of 92. And computer hardware moved up really strong this week, which is weighted heavily towards Apple. So Apple had a really good week. If I quickly go into that, we'll see. You'll see that. So 1 week. Where are you, Apple? There's other strength in there, but because of the weighting of Apple, it only had 3.84%. But you can see Apple had a really good week in there with a stage 2 continuation breakout to new highs. So you can see it's making new highs again. So we're back in stage 2 after our stage 3 back in this area here. So again, we've got some growth names moving up the table. Semiconductors dropped off a little bit this week. So I think AMD wasn't having a great week. It was a bit more erratic, but Nvidia was still strong. But you've got some more traditional growth names in there but you can see majority of sectors are still non-traditional NYSE, not growth names. I mean, they're more of the NYSE sort of areas of the market, but we are starting to see growth starting to come back into the top part of the table, whereas at the bottom of the table, we've had like renewable energy has been one of our weakest groups, which is the solar names since the start of the year, marine transportation, brewers. You can see like in the last 12 weeks, marine transportation was doing really well, but it was 55 places higher. It's not exactly 55 because there's 104 names, but it was halfway up the table, and now it's second from bottom. So that's really fallen off in the last few weeks or so. And then you can see brewers, which has been having a terrible time of late, and you've got airlines and hotels, etc. So also look at this on a 1 week basis. You can see where the strength over the last week has been. Like broadline retailers is the group that Amazon belongs to. So Amazon dominates the weighting of that group. So that's why that one has moved up considerably. So I think that's been the strongest for the last 2 weeks as Amazon's been starting to recover. Again, computer hardware, as I highlighted, you've got a lot of REITs going on in here. So real estate names have been moving up strongly over the last week. So like I said, that was the top name in our individual sectors, is it here? So you see it's top of the table in here. So you can see the REITs had a strong move this week, 4.06%. So continuing on, you can see strong volume coming in there, and it's been a tremendous sector to be in since March. But not an area I particularly focus on myself. It's clearly I should have been followed my own advice and looking at where the relative strength was. So this is how the relative strength helps. You can see moving above the zero line back here in May, and just it's outperformed the S&P 500 ever since. You see continuing to make new highs now. So it's been in a very strong stage 2 advance since March time there. So yes, let's move on now to other bits. So we talked about gold. So this week on the groups, so one of the things I noticed in the groups was that the gold, where are we? Skip back to the overall, just reorder this second, 1 second. So gold had been near the bottom of the table for a while, and mining, and noticed that they started to move up over the last few weeks. So as gold has moved into stage 1, as I highlighted before, so individual names as gold is now in stage 1 and been in stage 1 for about 3 months now, then now is the time in the stage analysis method to be starting to focus in on some of the individual gold stocks and seeing where they're at. As with gold in stage 1 itself, it's the key driver for the gold and mining stocks, and so you should be starting to see some early stage 2 breakouts and stocks in stage 1 in gold itself. So one example is Kirkland Lake Gold here. So you can see making a very similar pattern to what gold is doing itself. And in stage 1 here, I think another name is FNV maybe. So you can see that one's been making this high base up here. So had a sell off a few weeks ago, but holding up. So this one's got potential to move back into stage 2. I think there's gold itself, which is Barrett Gold. You can see stage 1 base forming on this one, not performing as well as likes of NEM, I believe. So similar sort of action in there. So you can see the stage 1 bases, etc., forming on these different stocks. So KL is one of the better looking names there and got potential for a stage 2 breakout above this pivot here at 44.75, for example. That would move it a strong move through that, which is about 6% above on. So you'd want to see a 10+% move through there on strong relative volume, and the RS line to start moving back above the zero line here and that flattening out. So as you only want to be in a stage 2 and it's above the rising zero line here. So you can see this period back here in 2018-19 when KL was outperforming and really strong. That's the time to be in these kind of stocks. If the RS is still below the zero line, then it's a bit more of a risky option. So that's one of the key criteria we look for in the stage analysis method. Right. Okay, let's move on to the next area. So another thing that I do each week for the stage analysis members is we look at this is a custom breadth chart that I create based off of, so this is based off of these. So this is the Nasdaq percentage of stocks above their 200-day, their 150-day and 50-day moving averages, and the NYSE version as well. So I combine the data from these two charts to create this single chart, which then gives us a sort of market timing model as such. So you can see when the timing, the signals work via its own 50-day moving average of the combined result. So the red line. So when we're below this red, you're below a declining 50-day moving average here, and it's below the key 70% level, then you're in a negative environment. And when you're above the 50-day moving average, then you're in a more positive environment. So basically, negative environment doesn't mean that you have to sell everything or go to cash or start shorting things. It just means that you're in a difficult trading environment. So I think, for example, the Russell is a good example of that. So if we look at these two charts together, so you look at where the Russell topped out in February, March time here, you can see the percentage of stocks above the key moving average here. So you can see 02 back here. So we topped out in February time, moved back below the zero, like the 70% level here in late February, and then into early March. And then we were in a negative environment ever since, except for a brief period in sort of May to June, early June time in here where we popped back above again. But for the most part of this year, since late February, we've been in a difficult trading environment, and so it's not been a time to be swing trading. It's been a time for much more day trading type moves where you're getting in and out of stocks much quicker, or only taking small profits with quick 5 to 10% moves. Versus and it's also been a time to be in the mega caps. So the difficult trading environment, money shifts towards more safe haven areas, so such as the mega caps and like the NYSC type names, like your utilities and staples, and the sort of safer areas of the market and financials, etc. So it's been a time to be in those kind of areas. So a difficult environment doesn't mean necessarily get short, but it does mean get the hell out of growth stocks, as basically they're incredibly difficult to trade during this period, versus once you're back above this 50-day moving average here and the 20-day moving average, we're back in a positive environment again. Ideally, I'd like to see a flush out all the way to the bottom, as you get the best signals come after the market has been all the way into the lower range, and then comes back through this 30% level here. So you can see back in April 2020 down here, we started moving back through the 20-day moving average down here in early April, and then in late April we got through the 50-day moving average and back through that key 30% level on around 24th of April there, I think it was. So that was a big buy signal in here for the market, and you can see we had a positive environment throughout the majority of the year there, except for these brief pullback periods here in the September, sort of October time. But for the most part, from April all the way through to February, we were in a positive trading environment, whereas since late February this year, we've been in a negative / difficult trading environment. So this is how this chart helps. For me, it's amazing. I think it's brilliant. So this is something I do for the members every week, and like it gives me kind of a good sort of feel for what the market condition is and what strategy I should be using based on its field position. So whether it's a 0 to 100% chart. So if it's above the 70% level, so it's much more higher risk. If you're below the 70% level, you're then in much more lower risk environment. You might still be selling off hard like down here, but once it starts to move back up again and you start to get traction again in this lower zone, you're in a much more low risk environment. You've got much more chance of big upside versus the bigger downside again. So ideally, like I said, I'd like to see a flush out, and we still could get it this year. September, October is notorious for big market crashes, so you never know. Like, everybody's getting quite bullish at the moment. We have just moved back into a positive environment. We're only on a tentative move back to the positive environment here. We've only had a week or so above, and we're not way out of it, and we're not back above the 60% level again. So you'd want to see this start to strongly rising back into the green zone here, which is the above 60%. At the moment, we're still in the middle range here between 40 and 60%. So with a reading of 54.5. So we've moved into a positive environment, but we're in a sort of a neutral middle market reading. So kind of tells you to be more aggressive if we've started moving into a positive environment, but also to be cautious as we're not yet in a heavily positive environment. It's start to test new trades and see what's working, and because obviously the environment's much more friendly at the moment. So this chart itself, like I said, is made up of the Nasdaq and the NYSC. So I also do separate versions of these. So this is the Nasdaq version. You can see also moved back to a positive environment after dipping into the lower environment. So for the first time since the 2020 shakeout. So we did have a dip in the Nasdaq down all the way down to there, whereas the NYSC has been much stronger during the year. So it remained above the 70% level all the way through until this period in here. So recently, which was all the way back in June there, whereas the Nasdaq started to break down in late February time. So this showed that it was much better to be. You can see the Nasdaq broke down in here, so really heavily negative, versus the NYSC was still hanging up and still in a positive, although it was in underneath the 50-day moving average in there. So you were in the sort of positive field position, but in a difficult trading environment. So it was kind of it hadn't yet broken back through its key 70% level, as well as moving below the 50-day moving average. So I hope that kind of helps you understand how this key sort of breadth indicator works. And you can only find this on my site. No one else does it. I do it manually. So hopefully someone else will do it and they'll find a way to automate it, because it will save me a lot of time of copying and pasting stuff into Google Sheets each week. But at the moment, this is completely exclusive for the Stage Analysis members. So another reason to join. There you go, quick plug in there. Right, so let's move on into here. So these are the individual percentage of stocks above their 50-day moving, 200-day, 150-day and 50-day moving averages. So you can see how these have moved up. You've had the short term has been strengthening, then the medium and long terms have both been falling off, and we started to recover a little bit. And if we look at it from a different perspective of a moving average on, you can see the long term is still below its declining moving average, and the medium term is just touching its moving average in here, versus the short terms, the 20-day and the 50-day, have got back into a sort of positive environment. So when all of these are in alignment, so you can see when they're above their moving average in here, so the 20 days above the moving average, 50 days above the moving average here, and the moving average is rising, so you see that's above its moving average in the 20-day and 200-day, so 20, 50, 150 and 200-day, when they're all in alignment, that is when you have the most positive environment for stocks. So you can see April to May sort of time last year, they were all in alignment, but then we got into June time here, the short term started to break off again. So the short term in the 20-day and the 50-day was pulling back, whereas the medium terms were still rising. So our most favourable time for obviously aggressive swing trading was during that April sort of May time there. Then we had less aggressive periods during the sort of June to August bit there, and then we got back in alignment again back in November to December to January area. So you see and we started to shake out a bit in January. So November to mid-January time, it was back in alignment again. And as you know, that was a very strong period for the stock market. So you can see when all these are in alignment, that's the time to be super aggressive. So what do we see at the moment? We see two of them are in alignment, and we're starting to get the third potentially, but the long-term one still hasn't gone back above yet. So we've got tentative start of a signal here. We might have what we had back here in April, but we didn't get all the way back down to the lower zone in any of them. So again, it's a tentative signal at the moment, and it signals to be testing, but to still be cautious as it's not a full-on raging bull signal yet. Right, then this is the 20-day moving average, percentage of stocks above their 20-day EMA. This is another one I look at on a closer basis. So I also add the relative strength line at the bottom here with the zero line that we talked about before, which is the percent, which is the RS. So it's the 252-day on the daily chart, and it's the 52-week on the weekly chart. So as there's 252 or 253 trading days in a year, so I use 252 as it's a good proxy, but basically for the 52 week. But you can see all through last year, this was outperforming the S&P 500 for the most part. You can see during September, October, and a brief dip at the end of October there, it underperformed, and then it got back into the lower zone up here, and then we moved back up. So again, the signals on these are when you get into the lower zone and then you start moving back through that 30% level, and ideally you get back above the relative strength line again in here. So you can see since March time in here, we've been below the zero line. We had a brief pull above it in here in June time, I mean. You can see the vast majority of this year we've been underperforming the S&P 500 on this, whereas last year we were outperforming the S&P 500 on this. So you can see we've just recently dipped back above it again for the first time again since June. So hopefully this can expand and we can get some expansion and start to get back above there, and that would really highlight that we're in a positive environment again. Next up is the NYSE Bullish Percent Index. So this is often called the head coach for the market. If we use it on a point and figure basis, this has been looked at since it was developed in 1955 by Investors Intelligence, and basically you've got a whole signal system based out of it. So with this double top breakout here on Friday, we moved back to bull confirmed signal here. You can see it was on a bear confirmed and bear confirmed back there, and then a bear correction, and then bear confirmed again, and with this breakout again, we're back to bull confirmed here as we've moved back above the double top breakout there. So on the daily chart, you see it's a little bit of a tentative one. It's still below its its declining moving average there. So I think this is what moving averages have I got on this one? So the 30 and the 10-week moving averages on this. So it's not back above that 30-week moving average yet. So I'd still count it as a tentative bull confirmed on the NYSE bullish percent. The Nasdaq bullish percent doing similar. It's pulled back to the 50% area, and we made a high there. It's not yet on a bull confirmed on this one. It's on a bear correction signal, but it's potentially what we call a low pole, as it's moved around halfway up. So I think if it moves one more box, that would be a low pole correction on that. So it'd give you a sort of bull alert type signal. Another area that I look at is the advanced decline lines. So you have the NYSE advanced decline line, which has been very strong. I said again, that September, October sort of period where it dipped below. We have had a dip below recently when it moved below in July, and then August, and we've started to get back towards the top again. So potential for this to break out to new highs once more, versus the Nasdaq, which has been underperforming since sort of February, March time. It did have that May, June sort of brief dip up again, and then it's been underperformed. We had this sort of spring type action. You can see the strength over the last few weeks that's got it back above its 50-day moving average. But everyone looks at it like this, but there's a better one. This is the Nasdaq Cumulative Advanced Decline Volume line, which is the advanced decline indicator based on the net advancing volume, which is the volume of the advancing stocks less the volume of the declining stocks. So this one I use in a pretty simple fashion. So this is the Nasdaq. So cross below the 50-day moving average is bearish, and cross above is bullish. So we've got a bullish signal since back in April last year. We did have a tiny dip below in May there, but immediately reversed back above. So this one's continuing to make new highs. So this has basically told you to hold the Nasdaq all the way back from April time back there, as we never got a confirming sell signal there. So for a sell signal, you need to see a double bottom breakdown in there. So I would have said, like, but basically it only had a tiny dip there, so you potentially had a sell and then a rebuy signal there, but it was pretty negligible. But for the most part, this would have kept you in the Nasdaq since April last year with not much bother. So there's a different. You can go to stockcharts.com, and they have a description of how it's calculated, and they show you example charts, etc. So that's really useful. Another way of looking at the advanced decline lines is the McClellan summation index and McClellan oscillator. So this is the oscillator is the short-term measure, and the summation index is a bit more of a medium-term oscillator. Not oscillator, is a bit more of a medium-term tool. So when it's below its zero line, it's more negative. But I apply a short-term moving average to it as well for short-term signals. So it's above that. I think it's a 10. What have I got on there? Yeah, 10-day simple moving average to that. So when it's above that moving average, I consider it in a sort of more bullish stance. So it's in a bullish stance, but it's still below the zero line. So it's kind of bullish towards neutral bullish at the moment on the summation index. But you can see we had a higher low on the oscillator back in August, and then it's got back above its zero line. It's been holding above the zero line for a while now. So as you can see, during July, August, it was mostly below the zero line. So back in a more positive environment on this one. And the MY, what else we got? AD advanced decline, not that one. NYSE, the NYSE version, making a similar thing. It's never got below the zero line really, and it's moved back above. So that's on a bullish signal again, and it's back above its zero line on the oscillator. Another way of looking at it, this again is the NYSE. So this is the EMA crossovers of the 10 and the 30 day, I believe I've got there. So is this a daily chart? Yep, 10 and 30 day EMA crossovers of the advanced decline cumulative line. So this gives signals when it crosses above and below. So again, it's moved back to a bullish signal there, whereas the Nasdaq is potentially just moving back to a bullish signal, but it's been on a bearish signal since July time. So if that crosses back over to the upside, that would also move to a bullish signal. New high, new lows. There's another one that I look at regularly. So as you can see, since since the October-November breadth thrust that we had, where we had a real breadth expansion on the new highs, where most of the market was continuously making new highs. We've put in another higher high. We did have a little dip below, but you can see in terms of corrections, you get the March breakdown last year, and then the bear market in late 2018. Like, you can see how deep it can go. So this recent dip back down to the -1,000 level wasn't much there. So we've recovered above that, and we've made 1,649 this week. So it's bigger than the move back down to the low there. And if we look at it on the individual here, we've got it breaks it down. The grey area is new highs and the red area is new lows. So you can see the new highs has vastly dominated on the NYSE for a while. Let's look at the Nasdaq. Same with the Nasdaq. We had a few peaks of new lows where they started to pick up again, started to get a little bit more dominant, and the new highs dropped off. But the new highs have taken over back again, and the new lows have started to drop off again. There was only 44 new lows on Friday, for example. Right, one more breadth chart before I go into some of the individual stocks. So this is the cumulative point and figure breakouts minus breakdowns. So again, this is a custom chart that I do for the stage analysis members. So this is basically it's really simple to create. It's just the double top breakouts on the point and figure chart using the traditional scaling method versus the double bottom breakdowns on the point and figure chart using the traditional scaling method. So just minus one from the other, and we get a figure each day. And then I create a cumulative chart and some various other momentum oscillators with this one. So you can see this move back above its own 20-day and 50-day moving average this week. So it's moved back into potential positive environment on that one. You can see down here, if we go all the way back down, it did very similar to what we saw on the other breadth charts, in terms of we got the March sort of sell-off in here, and then we got back above that 20-day moving average, and then the 50-day moving average in April time, and then started moving out. And then vast majority of the time over last year, it was above those moving averages, except for a brief dip below. So we were generally in a positive environment or on a bullish signal throughout that time. You can see it got a lot more choppy over the since sort of February time, where it sort of got into a sideways range and started moving above and below. So it's been much more difficult. We haven't made any new highs yet, so we're potentially in a positive environment, but we need to see it make a new high as well. It's made a new local near high, so that does give me like some pause for like it's doing what it's supposed to be doing at the moment. So it's looking more positive. So generally, from a weight of evidence approach over all of those breadth indicators that we've just looked at, there's generally a bullish sort of leaning at the moment. It's still a tentative bullish leaning, and we might be a little bit short-term extended in those, but it's definitely more weighted towards the bull side at the moment. So obviously that means it's a time to trade and not a time to sit on our hands. So looking for the highest quality stocks in the strongest groups in the best sectors. So that's what the method's all about. It's about getting alignment with the market. So the first part of the stage analysis method is called the forest to the trees approach. So we first look at the market, which is what this is all about. We look at what the market's doing, like what condition the market's in. Is the market index in stage 2? What's the market breadth charts doing? What's the weight of evidence telling us? Like Stan Weinstein was famous for having over 50 different indicators that he looked at regularly to create his weight of evidence. Obviously minimize that in my kind of analysis as a retail trader to make it simpler for myself, and focusing on these key breadth indicators that I've highlighted today, as they give a really good proxy of what's going on in the market between them, with the percentage of stocks above their moving averages, the bullish percent charts, the advanced decline lines, and the new high, new lows, and my own custom breadth indicators. So they give me a good sort of proxy of what's going on in the weight of evidence. So that's part one of the method, in terms of, are we in a positive trading environment? Is the market in stage 2? So yes, we're in a positive environment again now, and the market is in stage 2. Market's hugely extended in stage 2, and we're in a tentative positive environment, so you also need to take that into consideration. The second part of it is obviously the sector and industry strength, which we looked at previously. So we looked at the various industry groups and what's strong, so which areas of the markets should you be focusing on. So the top 20 or 30 of these is generally where you should be focusing. So you can see you've got semiconductors, software in there, you've got internet names, computer hardware if you're more focused on growth. So you've got your growth names in the top 30 there. Obviously for the last 3 or 4 months it's been coal and aluminium and steel and those kind of parts of the market that have been really strong as well. So it's been a bit of a bifurcated market, but you can see that the growth names are starting to come back again and starting to rise up the market. You can see in here in these areas here with the 1 week, the 2 week, and the 4 weeks. So that's the second part of the method. So you've got them. Is the market in alignment? Yes. What sectors and groups are strong? So we talked about earlier with the sectors and groups. Where has it gone? So which ones of these are strong? So we're looking at technology, we're looking at communication services and healthcare, and the Nasdaq itself and real estate. And then finally, you then get down to the individual stocks. So I talked about the SATA earlier. So individual stocks, if we go back to the group names, so now we've got each week or each day, not each week, I do what we call the stage analysis watch list. So it's not something I don't keep the watch list and go through them all individually all the time. I basically there's lots of stocks that come up in the watch list, and basically I'm constantly refining it and chopping names and adding names. It just starts off with a broader list and set alerts in the ones that are interesting, and then basically you're then more ready to react when stuff actually does move. And I'm constantly merging and refining lists and putting them into individual chart lists. So a good way to look at the watch list stocks is to use candle glance charts or the summary lists, because you can then order by relative strength. So for example, this is the weekend watch list stocks. So Asana has got the strongest relative strength at the moment. You've got Dillard's, MongoDB, Nutanix, Amberella, DocuSign, CrowdStrike. So I did a big piece on CrowdStrike last week as a potential position trade. DOCU's probably my stock at the moment. So I've been focusing on this one for a while, and I'm already long in this one. I did take it down here as well for a short-term swing trade up in this area, but I got back in again in this range here for a longer move. We're looking for, as I showed on the SATA chart earlier, it's back in stage 2. It's been through earnings now. It's got a technical attribute score of 5, so it's the strongest technical attributes it can have, as it's outperforming the S&P 500, its own industry group, and the group it's in is outperforming the market itself. So this is DOCU's one of the key names for me at the moment. It is in a short-term little base in here, so you can see it had a buying climax in here, an automatic reaction, secondary test. So we're in a sort of phase B area at the moment. So it tried to break out on Friday following earnings, but you can see some supply came in near the highs here, and it didn't even make a new high. So it could potentially need to consolidate. A bit of VCP type action would be good for it to go sideways for a little bit and tighten up a little bit more before finally making a move higher. But I still see this period as a proxy for what happened down here. So we had a similar sort of move back down here where we had the spring type action as we got here in this period. So I was tracking at the time. I did a post and said that I'd be looking for it to react in a similar way. So you can see since that time, it's moved in a very similar way to what we saw in 2019. So potentially it could be in this kind of area at the moment if you use that as an analog for what we're at the moment. So obviously lovely would be to get this kind of stage 2 advance in it. We had the March 2020 shakeout in this one, so you wouldn't want that shakeout move there. We'd want it to just continue up and have a really strong stage 2 advance. But you can see this base is huge and has generated a really large point and figure count. Like you can obviously take a smaller count from the smaller base in here, but from the entire base in here, it does project up quite a way. So this is one of my favorites at the moment that I'm watching. Asana I entered last week, so we go onto the private Twitter feed quickly. Let me get back into the feed, so you can see I entered this on what day was it here? So on this day here, I took the trade as it pulled back, so it was breaking. We had the earnings news. I was watching it overnight, and then it opened up and pulled back down on the intraday here, and was on strong volume. But you could see this really strong sort of base area on here, which was gonna. I was expecting to act as near-term support. So as it came back down into here, I took a trade on the sort of bounce off of that area. And then it followed back through, and I think it's continued up really strongly the last few days. So if we go back to the individual charts here, you can see that I entered down at this point here at 81.67, and then it closed the day really strongly, absorbed all of that initial supply that came in as people sold on the gap, and then absorbed all of that, closed near the high of the day, and then followed through on the following day. So for me, I feel like this one potentially could move up to 100 and beyond, as it's shown some really strong strength. You can see this huge volume that came in down here, and there's not been any evidence of supply as it's consolidated down here. So this one for me could be a big continual performer for a while, and so I'm quite pleased with that entry point on the earnings news the other day. So was it Thursday? As that was a good entry. And I did see on Twitter some of the bigger name traders had fucked it up. So it's good to see that. Obviously, I was in at the right place, and that not everybody was taking it. So there's plenty of others that will start to get back in again now. And what else we got? So on here there was. CrowdStrike said I was talking about. So this one, if we go to the weekly chart on this, has been making a lovely IPO advance phase, stage 2 advance. Did move into stage 3 for a little bit down here, and then it's made a stage 2 continuation breakout up here. Been consolidated last week, and it had earnings as well. I think it's been added to the Nasdaq 100 on the stage 2 breakout week there. So it survived its earnings. It absorbed that earnings day. It absorbed that supply. You can see heavy volume that came in here, but it did not get back below this area of support here. It just literally stopped at support and couldn't get any further. It closed right there on the day, but it couldn't commit below it. It was still well above its 21-day EMA. And then on Friday or Thursday, it tightened up, and I highlighted it again on the feed, and then we followed through a little bit on Friday with it moving back above there. So that's a potential near-term entry point there on that one, in my opinion. So I was potentially going to try and get back into Crowd. I was fairly fully invested on Friday, so I didn't take it, but I'm looking to get back into this one, as I think it's a key stock going forward. And again, it's got a big cause from this base that's formed over the last 6 or 7 months or so. So it could potentially have a really good stage 2 continuation move on that one. There's a few other names in here. PayPal I highlighted earlier. So this move that's been happening here, we had I think that was an earnings move on that day back through the 50-day moving average, and then it's tightened up around it. So on that intraday chart that I showed you earlier, and that's what that looks like on a 2-hour chart. So you can see the difference between the daily. So you got that stage 4 decline into stage 1, and then the stage 2 on a intraday time frame in there. So you got fractal sort of stages going on within, which you can then see if you go down to the 2-hour chart. And here's all that markup I said, and you can see that stage 2A breakout there through there, which was on that daily bar there. So back through this point here, which then gives you, and now it's on the back up. So potential for a break through this near-term pivot here would give you really good risk reward on that one, I think. So you've only got a 4% or so risk on that. So that's one I'm watching really closely. There was a few newer ones in here that I hadn't seen. So I said about the SPAC names popping up. There's these ones, NCNO. So this is a newer name. It was an IPO back in 2020, and it's been in the IPO advanced failure for the entire time. But you can see it's started to move into stage 1 here with its first higher high here, big volume. So we jumped up into stage 1. You can see we had like a fishhook type entry on Friday there, so on heavy volume. So that one started to perk up. NTNX is another one. We had another buy earnings gap type move and a fishhook type really strong follow through on Friday. So that one's also interesting. I think we look at that on the on the weekly chart, you can see that was a stage 2. It's already in stage 2, but a stage 2 continuation breakout on that one. Anything else that's really interesting? I think Deer is reasonably interesting. Got a bit of cup and handle going on in there. That one looks good. ALGM, you had a little bit of the Wyckoff base going on there. It's had a backup and it's following through. So in its phase D in that one at the moment. Ambarella's another earnings gap. AMCR is tightening up, so looking for a stage 2 continuation on that one. So you got some near-term pivot in there, probably from there, I'd say. So 2 to 3, 4% risk. So to get under the 21-day EMA, you'd need about 4% risk on that one. What else we got? Sana, we highlighted. Coop, this is one I highlighted a couple of weeks ago in this, or on that day there, actually, on the watch list. It's had three strong days from that. But if we look at it from a longer term perspective, this has been a really strong outperformer. Moved into a stage 3 sort of base, but it's made a stage 2 continuation and continuing off to new highs. So there's a really good cause built up on there from this near-term base in here. You can see the price action has been really steady and continuing to new highs. So this one from the financials group, I think it's a bank, it's just continuing to make new highs in stage 2. So not kind of area I tend to focus on, but with that kind of price action, it's getting my interest. Crowd already highlighted. Cisco getting tight in there, so potential for continuation. DDS, another one that's tight in the backing up, potential for continuation. DE already highlighted. DOCU highlighted. FTV. What do I like about this one? So big base, potential for a stage 2 continuation on that one. Gato with gold tightening up in stage 1, so silver names could start to come back. You've got this little micro range going on in here, which I talked about in the members video during the week. You see we've got this range going on here. We've got potential starting to move off into the phase D sort of stage 2 area, but no volume coming in as yet. It's still around its 50-day moving average, so this one starting to come back to life a bit. GDRX back above its 200-day moving average and out of this lower base, so starting to look a bit more interesting. GFL, a little bit of a cup and handle going on there, so no volume on the breakout on Friday low, so might not be ready to go yet, but would be good to see that one tighten up a bit in this sort of area around here. HCA, again, been tight, had an earnings gap up here after a really strong, long stage 2 advance. You can see massive stage 2 advance. It's been tightening up since that earnings gap up there. Well, it might not have been an earnings gap, but since the gap up there. So, and then it's been getting tight the last few days, not much in the way of volume. There was a bit of a heavy volume move there, a little bit more supply coming in, but still staying tight. So this one's got potential for a continuation. Home Depot, a little bit of a raggedy cup and handle going on, so potential low cheat area going for that one. Infy, potential for a stage 2 continuation. It's been massive stage 2 run again. IPOF, so this is one of the SPACs that I was talking about. So they've started to go down onto the intraday timeframes here. You can see you've got some big volume coming in over the last few days since the start of the month. This one and VIH both doing similar sort of things. What else we got? Massaport is another one that was a previous SPAC, but I think it actually came out of its SPAC, so it's not anymore. And this one has broken out of this lower base here, so you can see it's actually a stage 2 breakout this week with on stronger volume. The volumes needs to be 2 times for it to be a really good stage 2 quality, stage 2A breakout quality, but it was a stage 2A breakout on the weekly, so that one's in the breakout, so you'd be looking for some backing up action on that one. CNO we just covered, NTNX we covered, PayPal we've covered. RDW, this is a recent one, SPAC name again moving, so difficult to deal with, but you can see some volume coming in on that one. VIH covered. WPM is another one of the precious metal names, so another one of the gold and silver miners starting to move, similar to how KL's moving and gold itself. And Yeti is our final name. You can see it's tightening up in here, a little bit of VCP going on around the 21-day EMA, around the 100 level. So if we go down to the 2 hour on this, you can see it's tightening up a bit. So you could potentially, with your near-term pivot in here, it's about 5 or 6% risk at the moment in there, or even that pivot there would give you a little bit less, about 4% risk if you took that pivot on a diagonal. But the peak liquidity level is here, so in this zone. So what's that? The 101 to 102 level. So be ideally looking for a move above 102 on strong relative volume on that one. So that would give you roughly 4 to 5% sort of risk if you were taking the near term swing low as a sort of stop area or place to consider getting out. So that is Yeti. Right, I think that is the lot. Right, this was probably a really long one tonight. For those that stayed, then really appreciate you watching. Anyone that was a non-member, as I said, basically go to StageAnalysisNet and join if you want to see the weekly videos. They're not normally this long. They're normally about 35 minutes to an hour at the most. Generally average about 45 minutes on the weekend video, and I tend to do a midweek video as well, with try and get some members requests in on individual stocks that are markup. So hopefully you'll try out the service, even if you only try it out for a month, and like give me some constructive feedback. Then it's well worth it. It's very low cost. So I'm not trying to be a sole service for people. I'm just trying to give people some educational materials on stage analysis and the Wyckoff method and how I use it, and highlight stocks that I'm interested in, and generally how I'm trading. And I think it can be a great complement to other services out there as well. So yeah, give us a try, and thanks for watching.